Is Wall Street's AI gold rush about to blow up in our faces? Legendary short seller Jim Chanos, the man who exposed Enron, just dropped a bombshell. Today's AI boom looks like Cisco before the dot-com crash. Stocks are rocketing to new highs while profits crawl like snails. So what's really fueling this rally? Unstoppable innovation or a flood of blind cash chasing hype? Stick around, because what you don't know could crush your portfolio. Since late 2022, the AI craze has sent big tech stocks into orbit. Nvidia, Microsoft, and the rest of the Magnificent Seven have exploded, minting trillions in market cap as companies rush to buy AI chips, cloud servers, and anything with neural networks in the name. But Jim Chanos says we've seen this movie before, and it didn't end with a happy ending. Flashback to 1999. Cisco's order books looked unstoppable, with companies upgrading networks like there was no tomorrow. Then, one by one, big customers slammed the brakes. Orders evaporated. Cisco's valuation collapsed. Investors who thought they'd bought the future woke up holding the bag. Chanos warns the same could happen now if corporate spending on AI freezes. Could your AI bets be the next Cisco heartbreak? Here's the gut punch. Since October 2022, the S&P 500 has skyrocketed over 70%. But earnings? They've crawled up just 14%, the slowest non-recessionary profit recovery in years. That's not just a mismatch, it's a market floating on hopium, not hard numbers. So how is this rally even possible? Because there's a cash tsunami ready to flood markets. Money market funds are hoarding nearly $6 trillion, the biggest mountain of idle cash ever recorded. This money is itching for a reason to stampede into stocks, or run the other way. Meanwhile, passive ETFs have become the silent force pumping the same megacaps higher and higher, driving their prices far beyond what any earnings justify. It's like building castles on quicksand. One shift in sentiment, and the whole structure could sink. Bloomberg's fair value models tell a chilling story. If you strip out the Magnificent Seven, the S&P 500's fair value PE ratio drops to 19x, a number that actually makes sense. But keep them in? It shoots up to 22x, a level only seen before major corrections. Worse yet, those models suggest the S&P 500 should trade closer to 3,600 to 4,000, not near 6,000, unless earnings somehow explode 30% higher overnight. Here's the kicker. Current macro forecasts call for just 6% EPS growth. That's a canyon-sized gap between what investors hope for and what the economy is likely to deliver. Globally, it's the same fragile picture. Europe's Stoxx 600 had earnings estimates slashed this year, yet valuations kept climbing as investors chased any rally. In Japan, the profit engine is sputtering as post-pandemic tailwinds fade. And in India, a surprise double-rate cut failed to jolt stocks out of a rut, with companies still reporting sluggish revenues. But the AI hype isn't the only bubble Chanos sees. He's also torching the rise of Bitcoin treasury companies, like Michael Saylor's Strategy, which now boasts a market cap over $100 billion, even though it holds just $60 billion in Bitcoin. Saylor claims his company's risk-free business model is to raise money at ever higher premiums, but Chanos isn't buying it. There's a wonderful sales job convincing investors this is an economic engine, but it's not. Terms like Bitcoin yield are pure financial gibberish. And let's not forget Tesla. Chanos calls it today's Cisco, the ultimate hopes and dreams stock. He even joked, you could see Elon robbing a Brinks truck with a mask, and fans would say, that's Elon, must be a new business, let's give it $1 trillion valuation. So what does this mean for you? This market is surfing a wave of easy money and passive flows, not solid profits. It can keep rising until the tide goes out. And when it does, the same forces driving prices up could reverse just as fast. Here's what you should watch like a hawk. Earnings forecasts at major AI and cloud names. Corporate CapEx signals. Any pause could trigger panic. Money market flows. A sudden shift can fuel rallies or crashes. Because if profits don't catch up soon, this bull market built on dreams could turn into a nightmare. Thanks for watching. If you found this breakdown valuable, smash that like button, subscribe for more clear-eyed market insights, and share this video with someone who thinks the AI boom can't end. And don't miss our video on why Walmart and Amazon stablecoins could upend the financial system. Link in the description. See you next time.